Don't worry guys, you've clicked on the right video. Now that I have your attention, let's get right to it. I know that as NRIs, you're always looking to diversify your portfolio and distribute your investment in different baskets. So in this video, we're going to look at gold. This is a complete guide for NRIs who want to invest in gold in India. In this video, we'll be going through the benefits of investing in gold in India, the types of gold investments for NRIs, physical gold, gold ETFs, and gold mutual funds, and e-gold, sovereign gold bonds, the tax implications of gold investments, things NRIs should consider before investing in gold. Wait, aren't you forgetting something? Yes, hit that like button and share this video with others in your NRI circles. Subscribe to the channel and hit the bell icon. Now let's get on with it, shall we? Gold investments of any form provide several benefits to NRIs which vary based on their purpose behind their investment. First, gold is considered a safe haven. Gold is a relatively stable asset compared to other investment options like equities. The latter fluctuates during inflation and economic crunch. However, gold maintains its value during inflation and regains its value during economic crunches. Second, gold offers higher returns than inflation, thus acting as a hedge against inflation. Over the last 3 decades, gold has generated an annualized return of 10%. In the last decade, the return has been 11%. Third, gold can help you balance your portfolio risk. It makes up for a good instrument to diversify your asset portfolio. The asset class acts as a stabilizer in your portfolio, especially during times of crisis that may impact the market. Fourth, gold can be considered a long-term investment. Finally, NRIs also see gold as a long-term investment due to its returns, which can be gained with little to medium risk. Overall, these were a few major reasons why investing in gold benefits NRIs. Now let's look at the different avenues for NRIs to invest in gold. As NRIs, you see gold not merely as an investment. The act comes with a cultural connotation. As a result, NRIs tend to buy physical gold in 2 forms, jewelry and bullion coins. Buying jewelry has more to do with tradition and rituals, but comes with some disadvantages. These include the addition of making charges, wastage of material, and melting charges. These factors may eat into your profits while buying or selling jewelry. Besides this, there's always the concern of purity and certification. On the other hand, buying bullion coins, otherwise known as gold coins and bars, is more beneficial. These are pure 24-karat gold and come with the International Assay certification authenticating the purity. You do not have to pay any reselling charges. The making charges are a maximum of 3%. The minimum weight category for gold coins is 0.5 or 2.5 grams, and for gold bars it is 10 grams. The second type of gold investment is gold mutual funds and ETFs. Exchange traded funds or ETFs usually are trackers that monitor the value of the assets they are attached to. Under this context, gold ETFs are trackers associated with the price of gold in the country. Gold ETFs represent gold irrespective of its form, whether in paper or dematerialized. One gold ETF unit is equal to 1 gram of gold and is backed by physical gold of high purity. Gold ETFs function like mutual funds and are also available on Bombay Stock Exchange or BSE and the National Stock Exchange or NSE. To purchase gold ETFs from the exchanges, you will need a demat account. Gold mutual funds enable NRIs to invest in gold without holding a demat account. These function as normal mutual funds but with a slight twist. Your funds are either invested in physical gold or companies dealing with gold. These companies may be into gold mining, refining, import-export, jewelry and more. In this case, the chances of getting higher returns and the risk of volatility increase. On number 3, we have digital gold. E-gold or digital gold is another instrument via which NRIs can invest in gold in India. You can purchase a unit that is an alternative to 24-karat physical gold of 99.9% purity. Now, this might seem quite familiar with gold ETFs, but you must not forget a few key differences. First, gold ETFs are provided by asset management companies or AMCs across the country. These can be purchased on the NSE or BSE using a demat account. On the other hand, e-gold is offered only by 3 companies in India. These include Augment Enterprises Private Limited, State-Owned Metals and Minerals Trading Corporation of India, also called MMTC, Produit Artistique Métaux Précieux, Switzerland, PAMP, Digital Gold India Private Limited. You can purchase digital gold via e-wallets and a few other online platforms. The second big difference is that while digital gold can be exchanged for physical gold, Gold ETF can only be exchanged with money equal to the value of gold when you sell. Depending on the vendor, people can even exchange digital gold for jewelry. Third, gold ETFs can be traded, but digital gold cannot be traded. Overall, these are the three major differences between the two instruments. While deciding, you must consider factors such as taxation, your purpose, and type of investment, and then choose accordingly. Lastly, we have sovereign gold bonds. Sovereign gold bonds or SGBs are issued by the Reserve Bank of India on behalf of the government. Here, one can purchase government securities whose denominations are in grams of gold. However, it's important to note that NRIs cannot invest in SGBs. If any investments were made in this instrument before acquiring your NRI status, these bonds can be held and redeemed early or on maturity. Now that you know all about the instruments and avenues to invest in gold as an NRI, it's time to understand their tax implications. Let's start with physical gold. With physical gold, there are two categories: short-term capital gains tax or STCG and long-term capital gains tax or LTCG. If you purchase and hold gold for less than 3 years before selling and receiving returns from it, the amount will be taxable based on the income tax slab. On the contrary, if you sell the gold after 3 years, the proceeds will come under LTCG. According to the Income Tax of India, you must pay 20% tax and 4% cess, which means you pay a total of 20.8% as tax. Second on our taxation list is paper gold. Paper gold refers to gold ETFs, mutual funds, sovereign gold bonds, etc. The returns from these are taxed in a way similar to physical gold. Short-term gains will be taxed as per the income tax slab and long-term gains will be taxed at 20.8%. From paper gold, let's move on to digital gold. The tax on digital gold is the same as that on physical and paper gold. If you invest in gold, you might also have to pay a wealth tax. This refers to owning gold assets. If you as an NRI have a wealth of more than 30 lakhs from assets in a financial year, you must pay wealth tax. The assets include jewelry, bullion, furniture, and utensils made of gold or any other precious metals. In general, if you're looking to receive tax benefits, you can subscribe to capital gains tax savings bonds, under which NRIs can claim an exemption under Section 54 EC of the Income Tax Act of India. However, it is also important to check the precise tax laws in the country of your residence before investing in such bonds. We've covered the types of gold investments and their tax implications. Now let's move on to our gold investment checklist for NRIs. First things first, set a clear investment goal. Whether you're investing in gold for cultural reasons, diversifying your portfolio, building long-term wealth, or for some other reason, you must have clarity in your goals. Second, pick an investment option that aligns with your investment goals. For instance, if you buy gold for cultural or traditional reasons, you can buy jewelry. However, if you're looking at gold as a monetary investment, buying bullion coins or bars might be more beneficial. That's because with jewelry, there are certain disadvantages such as making charges, reselling value, loss of quality while melting, and more. Third, understand your tax liability. Understand the tax implications of the various forms of gold investment. These will help you understand how long you need to hold on to the asset, the amount you will be paying as taxes, how you will remit the proceeds from selling gold, and more. Determine if these align with your goals and needs and then choose the right gold investment option which is apt for you. Fourth, explore all investment options. It's also important to compare the numbers for gold investment in India with the ones in the country that you're residing in. Make sure that the benefits you receive wherever you invest are worth the hassle and yield sufficient returns. Fifth, know about repatriation laws. If you're looking to import gold or repatriate proceeds from gold investments, you must understand the different laws and regulations around that. These would mainly involve the minimum and maximum limits. However, you must also understand the laws around duty in the case of importing gold and find out the tax implications in your country. In essence, you must have a clear understanding of why you're investing in gold, the amount you'll invest, the period of investment, the potential returns, taxation laws, and repatriation. With this, you know all about gold investment in India as an NRI. To give you a quick recap, we went through these points. Benefits of investing in gold as an NRI. Types of gold investments, which include the likes of physical gold, e-gold or digital gold, gold ETFs, gold mutual funds, and sovereign gold bonds. Taxation laws around the different forms of gold investments. A quick reminder that all the information provided in this video is for educational purposes only and we do not offer any recommendations. If you found this video valuable and information useful, hit that like button. Share it with your friends who are looking to invest in gold in India, and subscribe to the channel for more such content. Got to go now. See you in the next video. Until then, follow the DYOR or do your own research rule.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.